While earnings season may be winding down, some big names will be reporting this week, headlined, of course, by chip giant Nvidia. Joining me now to talk more about it is Mike Coe, Chief Strategist at YieldMax. Mike, welcome.
Hi, Ashley. How are you?
Doing well. So, Mike, what are investors pricing in ahead of Nvidia's earnings Wednesday afternoon?
Yeah, I mean, it's interesting. The stock really hasn't moved a whole lot since the beginning of Q4 last year. I think between the beginning of Q4 through the end of the year, the stock was almost dead flat. It only changed about 4 basis points. And so far this year, up only about 1%. So I think right now it's interesting. We're not really seeing as much of a huge move implied in it as maybe we have seen in some years past. But we are looking at a move of probably in the neighborhood of 5 to 6% is what's baked into the options right now.
All right, and we know Nvidia is the world's largest company by market cap, but why else does the company's figures create a ripple across markets?
Yeah, I mean, it's really important for so many companies when you think about the fact that, about 31% of the company's revenues, maybe a little bit more, come from just 4 companies. You know, we're talking now about Microsoft, Amazon, Alphabet, and Meta. And it's really important for those companies as well because you're talking about a significant portion of their CapEx. I know you had a guest on a little bit earlier who was talking about, the relative importance. You'll remember several years ago when Meta was focused on the metaverse and they were investing massively in that space, and the stock was very hard hit as investors really were thinking maybe they're overspending and not really getting a lot of benefit from that in terms of revenues and net income. I think right now we're positioned in a way where I think there are some people asking similar questions at the moment. So, the real question I think for Nvidia is not really whether the numbers that they are going to report are going to be good. I think we all expect them to be, but it's really looking forward. Do people expect that the rate of spend and the rate of spending growth is going to keep pace with what we've seen in the past? Because I think there are a lot of questions at this point about how these companies are going to monetize their investment.
All right, and what are the biggest questions you and investors have ahead of Nvidia's report?
Yeah, I mean, I think it really focuses on those things principally. I think there is, of course, other opportunities for Nvidia. I mean, this was, after all, a gaming chip company originally, and then now they're at the center of AI, and we, of course, have robotics, I think, is the next big thing that everybody's getting excited about. So, from our perspective, I think that's one of the things that people are going to be looking at. Tesla is also investing quite a lot in this area, and as you'll see from their CapEx numbers, there's a lot of that money that flows to Nvidia as well. So those are the kinds of things that we're going to be focusing on. How much is going to start coming from other areas other than sort of the big data center investment that everybody already knows about?
All right, and what are you looking for when it comes to Nvidia's forward guidance, Mike?
Yeah, I mean, really, the question is, are the growth numbers that everybody is expecting going to be on track? It's interesting, of course, from our perspective, because, our funds are options income funds. So one of the things that interests us a lot isn't just whether the company is going to be announcing interesting numbers, but how the options markets respond to it. So when implied volatility, uncertainty sometimes comes as a little bit of a benefit to us. So if after the earnings call, we start to see the shift in options prices a little bit higher on the longer end of the curve, in some ways that could actually be good for us because we're going to be looking to harvest some of that income from the options. And so a little bit of uncertainty is good for us. But I think as far as investors are concerned, what they really want is to see some crystallization of the investment expectations that a lot of people have already baked into this cake. And I think that's reflected when you take a look at the share price underperforming the S&P basically since the beginning of Q4, probably by something in the neighborhood of 200 basis points or so.
All right, and we're seeing that mega cap concentration is continuing to shape overall market behavior. What does this mean for investor strategy? It's interesting because one of the things we've seen since the first week of December is a lot of sort of sector rotation. I think some people were thinking, okay, the AI trade has obviously been the star of the show now for a couple of years, and we've seen some other sectors really start to perform a whole lot better. Energy, I think notably, healthcare has started to do pretty well this year. We've seen that in some of the portfolios that we have, those things. But I would also add that as much as Nvidia has sort of flattened out, there are still some chip names that have really performed exceptionally well so far this year. I would point people towards names like Micron and even old guard chip companies like Intel have outperformed the market materially since the end of last year. So I think we're going to continue to see some of that sector rotation into some of the underperforming groups. Staples have obviously done exceptionally well, but I think maybe the valuations there are starting to get a little heady.
All right, thank you, Michael Coe, Chief Strategist at YieldMax.
Thank you.